So Nick, I'm making you the presenter. I'm not sure if you're going to be screen sharing some of the things that are on your radar. You are.
Dale. Hopefully
Nick,
you can hear me now.
Can
How
hear
are
you.
you, pal?
Got it. You know, it's been years.
It's been a while.
Yeah, you sound the same.
I feel good too. How about yourself?
Okay, buddy. So right away, you want to talk S&Ps. Everyone, I've talked to Nick before. Nick, let me check on my memory. I mean, you know Gann stuff. You're really a student of cycles, and you're a trader too. So
That's right.
you know, why waste any more time just jabbering? Why don't we get to the things on your radar and what you're seeing here?
Yeah. So today we're waking up to, well, not really waking up, but yesterday after the closing bell, we got some news on additional Chinese tariffs. Everybody knows. And you see here, this chart of the S&P that we dipped a little bit. And now the markets have recovered again. And we see this theme over and over and over. I still think the remainder of the year will still remain just like we've been since January. Very, very choppy.
Range bound?
Yeah, range bound till the fall, and then you get another big rally all the way up. I mean, the bottom line is this. I know I don't like to talk politics, but Trump is winning this war, believe it or not. Even though you have all these pundits coming out, he's going to get this done, and I'll show you exactly why. And it really has nothing to do with the S&P. And if you don't mind, I'm going to blow this chart up a little bit of the S&P, and I'm going to move this over, and I'm going to show you a chart of the Shanghai Composite.
Yeah. Oh yeah, they're losing the battle.
This is it. They're losing the battle, and basically, when you look at this chart right here, this says it all. And this is a monthly chart, and this is where the Shanghai is going to go, right to around 2,500. And once it goes to 2,500, you're going to see the Chinese are going to say no more, and they're going to resolve their issue, and they're going to come out and they're going to put rules in place against intellectual property, because that's really what this is all about, intellectual property. It really isn't about trade. Trade is just a tool that they're using right now, because that's what we really have. You know, we have a trade deficit with China, and he's going to use that. So here's the deal. When this gets down to this 200 period moving average on a monthly chart basis, which is right around 2,500, that is when it will all end. And it'll probably end sometime in September and October. And then the Shanghai will start to move back up. Trade war will be pretty much over, and the markets are going to move back up.
And you're thinking by September, October in there.
Thinking September, October probably does the trick.
Okay. What cycles are those? That time frame based upon, Nick? I know that you follow cycles. So is there some type of Gann time cycle?
Yeah, there are. So if you ever look at the markets, what you're going to notice is that we've always put in 2 months of the year are usually the most volatile every year. It's March and October, and we often have a September move as well. And you know, we could go into it for hours why that happens, but you know, just historically speaking, we all know that most crashes occur in October. They also happen in March. I'm not expecting a crash this year at all. But I do think that we put in some kind of a low for the Shanghai Composite in the month of September and October, probably more towards the latter part of September, early October. And then it's over. And once we get to around this 2,500 level, maybe give or take 50 points either way, I think that it's all said and done, and then the markets start to move higher again.
Maybe just back to the breakdown at 3,000 before another move, but at least you could count on some type of relief rally at a minimum, right?
Yeah, well, I mean, you're gonna probably we should expect a very good solid rally into the holidays, but I think for the time being, you know, going back to the S&P 500, and I'll just use the spiders for that. If you just look at a daily chart, you'll see that we put that top in January. We had a really rough March, and then we've been making some higher lows here. But we take out this pivot, we come back down and test, you know, maybe 260 area. I don't see us breaking down below that, though. I really I don't see the market breaking down below that. I think this is just one big wedge, and we're going to just trade in a very, very range-bound manner. really into the fall, and then the fall we get a blast off move to the upside.
All right, let me ask you, within the context of that, you'd probably be looking to buy weakness if we get weakness into that time frame. What sectors are you looking to use any weakness in the market to get into? Do you like the oils because of what's happening with energy? The miners still look crappy to me. What sectors in the market do you think will be the leadership? Semiconductors have been struggling. Where are you focused, Nick?
Well, I'm gonna go into a couple of different areas. One area I will not be in will be energy. So we'll get into crude oil in just a moment, but I don't like crude very much at all. I think crude only has maybe a few more points in it before we get a top there. So I don't like energy, but one area I do like is the airlines. So I'll be watching all the airlines, Delta Airlines in particular. I think that's a chart that we can watch, especially if we can get
back and fill the gap during the next rally.
Yeah, if you can get a stock like this, watch this. Well, look at this weekly chart. I mean, if you could get this thing down to around 45 or even a little bit lower, I mean, that's a home run for these stocks. Bigger picture, these charts look very, very strong still. So, you know, right now, this is what I call the ultimate buying opportunity, because you get to really go and get your shopping cart filled up when you get to the fall season. So,
and that theme of perhaps a peak in energy prices is going to play into, because that's a major cost for airlines. That's
absolutely. That's one probably the biggest catalyst. These companies have all been restructured. Their financials are in order. I mean, they're better. And check this out, Dale. You'll appreciate this. If you take a look at just a regular Fibonacci retracement, and I'm going to just take it from the 2016 low, and I'm going to use Delta because I believe that's the leading airline out here. You can own this thing at around $43. I mean, this is a no-brainer. I mean, that's what traders do. And, you know, the upside on something like this can easily be back to, you know, $60. So that's because the bigger trend is in picture. And, you know, a lot of times what I find when we go through periods like this, where you get these real choppy sideways markets, a lot of traders lose sight of the bigger picture. And, you know, even though you have these corrections like we've seen in Delta between 2015 and 16, don't forget that was where the stock went from basically $50 down to 32. You get something where the stock goes from $60 down to 43. You know, you're still making higher lows, and that's a bigger picture move, and that's where you make big money. So I think the airlines are one area where I'll be looking at. Delta in particular. American Airlines also is in play. I already own call options on this one. As I just like the retracement already that it's made. If you just take a look at that, and I'll push that up for you, what you'll see here is that we were at the lows there, and look at that beautiful 618 right now, and that was a nice breakout there. So I think this is one. Yeah, I just own longer term call options in this one at the moment.
It's incomplete too. It's only got 2 drives up there at the top. Nick, you know, I've been asking a lot of people this that have come on F.A.C.E, and I say that the most embraced market narrative out there is that the bonds are in a big bear market, and as of late, you know, rates have softened, and we're, you know, getting closer and closer to an inversion of the yield curve. I was wondering where your head was at on this.
Well, I'm in the camp that I always let the charts tell me more. So right now, you're going to see this is a chart of the 10-year U.S. Treasury note yield.
Got it.
And, you know, you have 2 symmetrical moves taking place here. So you can see this first move up off the lows, and we went, now you pulled back. So the next, markets love to repeat what they've already done. So the next repeated move would take bond yields up to around 331. I am in the camp that I think we are now at a point where we're going to see higher rates. I do think that's coming. It's just not coming fast, and it's not going to come quick until we get, you know, into probably 2021, 2022. Then I think, you know, we're going to see bond yields really start to move up quick. But at the moment, we're just putting in a consolidation.
We're in kind of like a sweet spot.
We're in a sweet spot, and that'll
Okay.
probably last a couple years. There's nothing to say rates are going to go soaring higher, even if the Fed raises a quarter point every quarter, which is kind of what they've forecasted. Look at what Europe's doing. These guys can't raise rates. I mean, Europe's a mess. That's probably, I mean, that's a disaster waiting to happen.
All
So
right, good. You brought it up. When the sweet spot ends, and it sounds like you're pretty sanguine for the next couple of years. I've heard, be sanguine until the end of 2019 by some, market, astro guys and things like that. Do you think that the epicenter this time is going to be Europe's that's going to spark the next problem in the global economy?
yeah, I think it'll be Europe or Japan, one or the other. I mean,
Okay.
it's going to be one or the other. I don't.
Does that give you a view on the dollar, Nick?
Yeah, I'm bullish the dollar. I've been bullish the dollar for since January. In fact, I'll show you guys a chart. I got long the dollar right here. Right here is where I was long the dollar. And excuse me, let me get my dollar chart up. Excuse me, January 25th, I got long the dollar right here. And I'm out of the dollar actually at the moment, but I am looking to re-enter the dollar around 92.50 on the index to 91.50, somewhere in here, just pattern pending. But
Okay.
yeah, I'm bullish on the dollar going forward.
Okay, and part of that'll be when China makes a deal with us, because they are taking the yuan down during this trade war. I mean, no one ever called them a currency manipulator, but they are using the yuan in this trade war battle.
Yeah. So here's the story too. Just to get to that. So as a trader, I've told my traders back here at 630 was where I told them they could get long, and here was my target. So we got the 660. Now we'll let the consolidation move happen, and then this is going to go over 7. So this has a lot more upside, but right now it doesn't. And this is this is the chart of yuan. So
this is the depreciation of the yuan happening during the trade war.
That's
okay,
right.
So they're going to use every tool.
Every tool. They're doing it already. And and you just see what's happening in the Shanghai. That's telling us the whole story, what's going on. And again, like I said, this has to go all the way down here before things are settled. So we still got, roughly 300 points of downside in the Shanghai composite, and then you'll start to see deals getting worked out. It's not going to be because this is a daily chart, but really the pattern.
Well, that's a measured move. If you take it from the breakdown, that would be the measured move that we had on, I think it was your daily chart. It was like a descending triangle failure that it broke down at 3,000.
So here's the monthly chart just to get the big perspective of it. And you can see, the Chinese market peaking in 2015, and now we're going down, we had that big thrust here, and then we had what we call an inside bar pattern here, and now we're going down into the 200 again. And look what happened the last time we went down to the 200, right? It held. See how it held in going back to 2014. Then it rallied up again, and we're going to see the same thing once again. So I believe this is just a repeated pattern. The Chinese are very, very smart people. I believe it's the one government that uses technical trading. So these guys know they don't want that 200 to get breached on a monthly basis.
That's going to be interesting to witness. Thanks for calling our attention to it. Nick, you see anything, people, it's pretty weak, bleak looking picture. You're bullish the dollar. I assume you're probably negative the gold and anything related to precious metals. Is that correct?
Well, that is correct. Right now, the gold chart looks terrible. I just don't see gold really standing out at the moment. And, I do think gold is going to have its day in the sun. Don't get me wrong. But when I look at this chart here, and I'm just pulling up a daily chart, we're just constantly, getting minor rebounds, and then we go lower. Right now, I think gold is poised for a minor bounce, and that's all I can see. I don't see anything major. Even if we rally back up, I don't see gold breaking significantly higher. When you look at this monthly chart of gold, and believe me, Dale, I own gold bullion, I own silver bullion, I have for years. So, I'm not bearish gold, but what I am is I'm just a realist in that we've been in a range bound chart pattern for a while, but that's okay. This is just building, a potential longer term base, and then, maybe it can pop out. But one thing I will say about gold is that, we had the 1999 lows. This is just a common retrace after a monster bull run that, lasted over 10 years. So to see what it's doing here is not bad. Gold will have its day in the sun once again. It's just not right now.
Okay, well, the world has changed since I last talked to you, so you know where I'm going, right? Bitcoin and crypto. Do you pay attention to it? Is it? What's your view on it? Do you trade it?
I have not traded it yet. I am starting to pay attention to it. So, we have now Bitcoin is now here, and it's just not enough data on that futures chart for me to work off of, and that's why I really have left it alone. But the reality of it is, it's okay. If I have to think that all world governments are eventually going to want to go to a cryptocurrency, and that's why they're letting it hang around, or else they would probably shut it down. And the reason why they're going to want some type of cryptocurrency in the future is so that they could, raise taxes. I mean, look at Europe. I mean, they tax you on everything. So the bottom line is, cryptocurrencies are probably here in one form or another, and I think the central bankers around the world are watching it closely and seeing how it works out, and basically taking inventory of this experiment. Personally, I'm not a personal fan of cryptocurrencies, but I'm a realist, and I take whatever the world gives me, and I accept it. So I'll be watching this market closely. Looks like the blockchain technology is something that's probably very prominent and here to stay for a while. So, that's something. But as for these cryptocurrencies themselves, I am not a trader of it yet. But if we get, good chart setups and it looks legitimate on the charts, then, I would trade it. Okay,
well, another great conversation, Nick. Let's not let as much time pass as we did before today. So I really appreciate you sharing all your insights and with clarity and conviction, and I wish for you and everyone you're associated with to have a great summer trading season.
Thank you, Dale, and it's great to be back, and it's great to hear you're doing well, and God bless as always, buddy. Thank you.
Thank you, Nick, my trading warrior brother, Nicholas Santiago. Nick, are you still with me?
Yeah, I'm still here.
Why don't you show your website so people know how to get a hold of you? The company's Twitter handle is at ITMS, in the money stocks, at ITMS.
Yeah, so I'll just put that the site up there so everybody can see real quick. It's inthemoneystocks.com, and again, come on over, check us out, and you'll see everything that we do there. And here's just a lot of our free market action right on our Rant and Rave blog, and we put lots of setups out there. Put a morning video out every day and give some trade levels for day traders as well. And again, we specialize in swing trades in our research center. We have our day trading service, and been around now over 11 years, so it's going strong.
I encourage people to follow Nick. He's a pro. Good luck, my trading warrior brother. Thanks, Nick, and everyone check Nick out. He's really got a great eye. Thanks for your time today, buddy.
Thank you, Dale. Thank you again. Have a great day.
Say hi to your partner for me, and everyone. That's a wrap. I'll see everyone tomorrow. Remember, don't just count your pips, count your blessings. Thank you, Blake and Steve and Stelios and the F.A.C.E team and Nicholas Santiago. Adios, everyone.